Hello, good morning in Europe, good evening in the States. This is Ahura with another daily market outlook. Let's see what happened in the market, what is going on, and what we are waiting for today's stock market. As it was expected, as I told, while we're getting closer to the end of the week and the next week, the market risk will increase because of less ending the earning reports in one side and another side. We are getting closer to the Federal Reserve meeting in next week, November 2 and 3. That was the reason. On the other hand, yesterday's earning report was not as good as it is expected. Boeing lost the expectations. General Motors and some others, even if they were better than expected in the EPS, they lost the expectations in the revenue. So most of the earnings in their outlook, also most of these companies in their outlook, also they mentioned about the shortage in the supply chain, and it was another reason to put the stock markets under pressure. You can see the market risk here is increasing sharply again. While the market risk is increasing here about 17 yesterday as it happened. Sorry. At the same time, with increasing the stock market risk, we can see that S&P 500, Nasdaq, and Dow Jones, all of them, they lost last night. Even if the Nasdaq, I'm so sorry. Sorry. Even if the Nasdaq was not falling as much as what happened in the Dow Jones, but still it lost its attitude yesterday, its positive attitude yesterday. And as you see here, if you go to the 1 hour chart, you can see here that the side movement here started, and this kind of but still, while the side movement, we can see here OBV trend line and RSI, they have the signal of the weakness. Today, Apple and we have the Apple and Amazon earnings reports. These tech companies supposed to help the Nasdaq and even the S&P 500 and Dow Jones a little bit, but still we are waiting to see another weakness. We are waiting for another weakness signal in the stock markets as well to start from tomorrow. This general overall the weakness that started from yesterday to be continued. This is totally in the stock market. In the oil market, what we can see here, in the oil market, the weakness started after several reasons. The first of all, the American US crude oil, and in fact we can say that American US crude oil or American and US crude oil, crude oil inventories in United States was increasing in the last week, and this increasing in the crude oil inventory levels helped the markets to lose to lose the prices. Increasing. I'm sorry, just my mind went to several other points at the same time, so I lost the words. Sorry. What I was saying is that, according to the EIA reports, yesterday U.S. crude oil increased. Let me find exactly the number. Increased almost 3 million barrels in a week ended October 22nd. Before that, on a Tuesday, also we had the inventory reports from the API, and it was also more than expectations. Shows that U.S. crude oil inventories increased more than expectations. So both of them together, they help that to see that we have more oil in the inventories. At the same time, we had some disruptions in the supply that happened after in the last month. So these after the Ida storm, that shut down some of the supply chains, but they are all back in the chain. They are all back, and now we have the almost 1.2 or 3 million barrels more than before that we lost in the States. So this return of the inventories, this return of the supply, plus more inventories, all of them together, they helped us use crude oil to lose. On the other hand, we had the reports that many of these buy positions that we have in the market right now is because of the traders and not the investors in the in the oil market. So all this together, they helped and they gave the hand together to put the pressure on the crude oil prices, U.S. oil and crude, but sorry, I'm just today, my mind a little bit busy. Just sometimes I have to free the mind. Yeah, free your mind and come here back. Every day I'm waking up early morning at 5 a.m. Today I woke up at 6:30. So there are so many things. It's like I lost 1 hour, it's like 30 minutes, 1.5 hour of my day. So I have too many things to do that I didn't have a time enough to do them. So the mind is sometimes getting busy with the final forgetting where I have been. Okay, let's put them aside and come here. Yeah, these data together put the oil market under pressure, both for the U.S. Oil and Brent oil. So yesterday also we had the Canadian central bank meeting. BOC yesterday, as it was expected, decided to don't change the interest rates, but to start the rent hikes from 2022. But at the same time, they decreased the asset purchasing amount to the $1 billion a week. Actually, they told that between the $4 and $5 billion a month, and it's depend on the market expectation, but it's not going to be the more than $5 billion a month, but it can be less than $1 billion a week. So this is what happens. So and also they increased the rates interest rate, they increase the expectation rates kind of the rate expectation interest rates expectations for the coming years, for this year and the coming years. At the same time, they decreased the economic growth expectations for 2001 and 2002. Before for 2001, it was, let me see the number. The growth expectation, GDP expectation for 2001 and 2002 decreased to 5.1, which it was 6 before, and 4.3, which it was 4.6 for 2001 and 2002, the GDP expectations. For the inflations, expected inflations for this year, it was 3%. It was 2.4%, so it's increased to 3.4%. And for 2000. For this year, actually, for this year and for 2002 also, they increased the expectations to 3.4%, which it was 2.4% before. So for this year, expectations for 3%, they increased it to 3.4%. For 2022, expectation was 2.4%, they increased it to 3.4%. And for 2023, the expected inflation was 2%, which they increased it 2.2%. So all this increase, all this expected inflations increased. At the same time, GDP expectations is decreased. About the oil, I told about the stock markets. I explained what happened for today. As I told in the earning reports for today, the focus will be on Apple, Amazon, and Mastercard. Actually, we have the Shopify, we have so many others, but the most important reports will be the Apple, Amazon, and Mastercard, which we have to take care about them and which we have to focus on them. This is the most important things that we need to also in the earning reports. In the economic data, as we know, we had the Japanese central bank's monetary policy rate just like 2 hours ago. They didn't change anything in the rates as it was expected, and monetary policy meeting also they had no change in their monetary policy meeting or in the interest rates as it was widely expected. Later today we will have the European Central Bank meeting. For the European Central Bank meeting also, we do not expect to see any changes in a policy meeting or in a policies or monetary policies or interest rates. At the same time, what we are waiting for is to see that a little bit wording. They probably in the announcement they will use the words of the words about the inflation and the using of we will have all tools to control it, and if it's needed, probably we will see these words in the announcement. Why? Because inflation is really the main concerns or at the moment at the market. At the same time, economic developments also is not as good as expected in Europe, so they don't want to decrease their support levels. So they will hold their support, but they will in the announcement they will just tell that yeah, it is the worrying, and we are worried about the situation. This is what we are waiting for today. So this expected, what we are expecting. So the result, as the result, we can see what we will see is that to stock markets here. Let's go to stock markets to just correct a little bit themselves today. Come at almost the same levels as yesterday, but from the Friday again we will see the weakness there. US dollar index yesterday, after the increasing the market risk here, as you can see, US dollar a little bit decreased. Why? And just like what had ease. Why? Because US 10 years bond yields also decreased to 1.55, which it was 1.64 in a previous days. It fell to 1.55, and it put the US dollar also under pressure and increased the gold price again above 1,800. Currently, for the gold, we are waiting almost the same levels. On the cryptocurrencies market, we have again more news about the regulatory, about the SEC, that all of them, they are putting the, as it was expected in the last days that we were talking, all of them, they are putting the cryptocurrencies market under pressure. As we can see, technical indicators also all supporting the more down levels. The next target will be 57,300, and after that 53,000 will be the 53,200. So 57,300 and 53,200 all will be the next levels for the bitcoins, as we are expecting to see. This is the overall what's happened in the market, and our expectations, and my expectations actually from the market. Hope it was useful for you. Please write your in the comments, write your idea, and let me know what exactly you want to hear and see for the next days. I will be with you. Bye.